it is, a huge beat on Canadian jobs numbers. 91,000 jobs created or added to the Canadian economy during the month of December. That's almost a quadruple the 25,000 jobs that were expected. There's the loonie dropping. As you can see, the rate of unemployment comes in at 6.7%. That is a softer rate of unemployment than the market had been expecting. 6.9% was the expectation. That jobs number of 90,000, specifically it's 90,900. That breaks down to 33,500 part-time jobs added, 57,500 full-time jobs added, and the participation rate comes in as expected at 65.1%. Wage growth comes in softer than expected at 3.7% versus the 3.8% that was expected. So on balance, I think that is a stronger jobs report than we were expecting in a couple of different ways. Brendon Bernard is standing by. He's going to give us his insight in a second. In the meantime, I'm going to tell you about the U.S. jobs numbers. And as we do, we'll look at the U.S. futures contracts. The change, and you can see them significantly now in negative territory. And Karl Berger talked to us about a good news is bad news mentality among investors. The U.S. change in non-farm payrolls, 256,000 jobs added to the U.S. economy during December, many more than the 165,000 that the street was expecting. The rate of unemployment comes in at 4.1%. That is softer than the 4.2% that the street was looking for. And average hourly earnings come in at a growth of 3.9%, also a bit light versus the 4% estimate that the street was looking for. So stronger jobs reports on both sides of the border. We'll rephrase those numbers for you. I've thrown a lot of numbers out there. There you see the action in the bond market as well. Let's bring in Brendon Bernard. He's senior economist at Indeed, and he's looking at these numbers right now. Brendon, the Canadian jobs numbers, what do you think?
Finally, a decent month. It was a pretty rough 2024 for the Canadian job market. We saw job gains in the 40s and 50s thousands often, but every month they were always lagging that surging pace of population growth. Finally, we get a break in that. The number of jobs added today actually surpassed that rapid population growth. It's just 1 month. The unemployment rate, 6.7%. That's still well above where it was earlier. And so the broader, softer trend in the Canadian labor market persists, but anytime you can kind of like slow that trend, it's a good sign that things, at least for now, aren't going off the rails.
The rate of unemployment, I said, I told viewers, came in at 6.7%. That's weaker than the 6.9% that the street was expecting. It also represents a decline from November's number of 6.8%. And that's a reflection, as I think you've just told us, is that the total number of jobs added has exceeded the newcomers to the workforce, the increase in the workforce. How significant is that decline in the rate of unemployment?
It's part of the overall story of the job numbers. The unemployment rate numbers are a kind of a reflection of just that balance between overall size of the labor force and the number of people working. And at least for this month, things kept pace. The overall backdrop, it hasn't been as positive. We've kind of seen as employer demand has waned in Canada, unemployment rise, and we're going to need a turnaround in employer hiring appetite to really get these job numbers on a sustainable path forward. But at least in the near term, to end 2024, things ended a bit stronger than expected.
Well, and 90,000 new jobs sounds to me like actually a fairly robust underlying situation. I don't think we've seen wage growth numbers yet for December, but I mean, it's neat. It's nice to think that the Canadian economy isn't actually falling off a cliff, or at least that's what this says to me.
Yeah, and I mean, I do think, you know, November was like a pretty bad month in the labor force here. We saw the unemployment rate jump up a few points to 6.8%. So kind of like thinking about the 3-month trend, you know, we like, I don't get too excited, but It's just the pace of direction. In a recession, things get off the rails like quite quickly. This isn't this. You don't see like numbers like that, like this, in that kind of like real downturn environment. And so I think that's kind of like my positive takeaway from this is that a break in that like weaker trend that's slowing that pace of deterioration down. It's a sign that okay, like maybe we can get through this.
Do you think this changes the Bank of Canada's thinking about the end of January?
It's hard to say. I mean, we've got the storm clouds on the horizon are really kind of like looming over the whole Canadian economic conversation right now. So I wouldn't necessarily say, but it's possible. I'm curious how some of the markets react. Whether we're kind of in that same still 50 rate cut world or 25. Maybe this on the margin shifts things on the 25 side. But I think this is just one data point input in that.
Why is the Canadian dollar coming down on this news? That seems counterintuitive.
Well, I mean, we got to look at what's going on in the U.S. I think to answer that,
right.
And a bit of a beat on the establishment survey, over 250,000 jobs added, and the unemployment rate ticking down. That's another case where the U.S. unemployment rate has been creeping up gradually the past year or so. It ticked down from 4.2 to 4.1%. That's a welcome sign for the U.S. economy, and a stronger U.S. economy means the Fed will cut more slowly. We've already got a gap of a full percentage point between Canada and U.S. policy rates. And so maybe that gap will persist.
Karl, your take on the U.S. jobs numbers, I'll just repeat them for our viewers. 256,000 jobs added to the U.S. economy. That is almost 100,000 more jobs. It's 90,000 jobs, more jobs than was expected by the street. The rate of unemployment comes in at 4.1%. That is weaker than expected, and it's also a decline from November's level of 4.2%. And average hourly earnings are softer than expected. Growth in average hourly earnings come in at 3.9%. What's your take on what this could mean to markets?
For a market that was looking for, or that was still pricing in Federal Reserve cuts, it's probably not going to be terribly welcome news. And for the vast majority of companies that we own that are generating free cash flow for their bottom line, I think it's actually good, solid news. I mean, it probably means a little bit more volatility in the equity markets from a short-term perspective. But overall, if I'm thinking years down the road, I'm not sorry to see job growth in the U.S.
Brendon, how wide are interest rates going to get on each side of the border?
I'm probably not the best person to answer that. Just one kind of like wrinkle on the Canadian job numbers that it's always good to check underneath the surface is the public versus private kind of divide there. This was a month where we actually saw a bit of strength in all three categories of job numbers. Private sector employees rose a bit. Self-employment had a stronger than usual month, but still public sector employment adding 40,000 or so jobs in the month. This has kind of been a relatively like steady pattern over the past 5 or so years that that public sector growth has grown faster than those other sectors. And so on the private sector side, it would be a bit more encouraging for the kind of like that GDP strength and the strength of the Canadian economy to see this a little more tilted to the private sector. And so going back to the point on rates, this kind of like that the public sector keeping the way is sort of leading the way is sort of like going to be a factor, a sign that the domestic private sector in Canada is still a bit shaky. We're still, I think that long hangover from that higher rate environment is still a factor going on here. And now we have a spiking economic uncertainty around trade. That's another factor that's going to influence